but in my review of the literature, there's also been several states that have stopped the gross receipts tax in the recent past because of negative adverse consequences. Could you touch upon those states' experience with the gross receipts tax and why they've stopped?
Mr. Co-Chair, Representative Buehler, we have seen that in some states, and there's a good article from the Tax Foundation that goes through those, and we can make that available for the committees. One area where we know we've seen some move toward a gross receipts tax and then backing off has been in the area of a corporate minimum, such as we used in Oregon. New Jersey, in particular, had a pretty significant increase in their corporate minimum, which is based on gross receipts, and it generated significantly more revenue than ours does relative to our corporate income tax. That met with a lot of backlash, and eventually New Jersey eliminated that option, went with a strictly corporate income tax. The other one I know of is Indiana, after a long period of time, which I believe had an assortment of different rates on gross receipts, though the decision was made to move away from that and go to something more uniform. But I can get that material for the joint committee, so you can look through that.
That'd be great. Thank you.
Representative Marsh.
Thank you for sharing. So, on the question of impact on consumers, and we've already heard a lot of claims about that, but I am assuming that if we take the formulary and we fill in some designated tax rates and some other assumptions, that you can actually model some of these options for us so that we actually get the science behind that claim.
Mr. Co-Chair and Representative Marsh, yes, we can look at, we have in our general equilibrium model, we have 9 different household groups from less than 20,000 to greater than 205,000. So we can look at how we think that would affect the distribution of the tax burden, or what we call final incidence, which builds in the effects of employment losses or wage changes and consumer prices. So we can look at that, and we've done this quite a bit in the past. We did it a number of times with the tax reform options report we did a couple of years ago, where you can look at different, as we suggest, look at different personal income tax options that could offset that, and you can see how it would affect, or how at least the model shows it would affect the distribution of the tax burden.